So, hello everybody. Here we go for another one of these short Substack videos. No trade calls, no recommendations, or responsible loan stuff here for educational purpose only as we enter December trade. Now, keep in mind, again, everybody's going to be all bulled up into December with strong seasonals. December is a little bit of a funky month also because, the first part and the middle part can be a little bit funky. Most of that, Christmas rally, Santa rally is the last 5 trading days of the year plus the first 2 trading days of January. But we have a lot of event risk, geopolitical risk, headline risk, Trump tweet risk. We've got FOMC. We've got a lot of data this week. We've got Trump coming up. We got FOMC coming up. So we'll have to see what gives. So let's just focus on the technicals here. So SPX, what's going on now? We've had a lot of wheeling and dealing, and we said, you have to focus on the importance of that Friday range, affectionately called the Trump tweet day. And basically, you saw that once we broke above, the market failed the breakout and started to make that whole series of lower highs. And what we're discussing is, as long as the lower highs and lower lows were holding, the bears had a chance to try and press lower. Incidentally, you can see that last lower low held that Friday range. And essentially, this continues to be that zone, as we discussed in other videos here, is that's very neutral in that zone. Here, now that we've broken that series of lower highs, clearly the bulls are 100% back in control because they're back above this range. They've broken the series of lower highs. So here, everything is pointing to a grind higher and moving into those upside targets, which we discussed through all-time highs. One thing to keep in mind is when you go through holiday trade, you have that funky action with, thinner volumes. And what you would expect is the market to try and come back to the range or where we closed the last full trading day. So that would be Wednesday last week. Also, when we have green day every single day of the Thanksgiving week, it's not uncommon for the Monday to trade heavy, right? For the Monday to trade red. So here, all things being equal, you would expect us to try and come back, fill that gap, and that's pretty much in line with that Friday high. So nothing much has changed going into here, right? Continue to trace that on your chart and continue to look at that as a very neutral zone. Above, market stays bullish green for all-time highs and for those upside targets into the 7,000, 7,500s. And below, daily closes, weekly closes below this range, and in this case now below that 100-day moving average, opens up that much bigger unwind back into the 200-day, back into these previous highs. But essentially here, we're just kind of, we're stuck, we're chopping around. And what's going to be important is how the market settles once we get back into, full trading volumes. Don't forget that this month can be a little bit funky. Again, we have a lot of data this week. Then we got that FOMC coming up. We've got December expiration. So quad witching is the most bullish expiration cycle of the year. It's very funky dynamic because you have that high, pretty much the highest volume week of the year, followed by pretty much the lowest volume week of the year. So essentially, once we get through December expiration, there's less and less and less edge trading for the remainder of the year. But right now, bulls are in control. As long as we hold this breakout outside of that Trump Friday tweet range, your base case assumption has to be sideways to up. The thinner the liquidity, the higher the chance that mechanical flows are going to continue to drive higher. If we trade above those previous all-time highs, there's very little reason for anybody to want to short. So drift higher any new high possible. If we trade back inside that Trump range, that neutral range, even though you get downside fills, even though you may hit some air pockets, don't get excessively bearish unless we close back below the 100 DMA and below the 100 DMA. Then you can get a lot more aggressive, and you'd be looking for us to go back into these highs and back into that 200 DMA. So again, I think the structure is very nice. It's quite nice when the chart lays out this way because the levels are very clear. They're very clear for everybody. So it should be fairly clean trading around these zones. Okay, wishing everybody an awesome one. All the best. Take care. Bye-bye.